Money Vikings, welcome back. Got a good one for you today. A couple of key points I want to hit quickly because I try to keep these quite compact for you because I respect your time. So I value your time. I'm not going to drag this out. So the main message is to buy the dip, add more, stack more, add more Bitcoin to your portfolio at these lower prices at the moment, and that is coming from Michael Saylor. So Michael Saylor is saying this is a great opportunity to add more Bitcoin. I agree. I am in the same boat, and I'm going to stack some more sats because, you know, if you look at the trajectory of Bitcoin over the last 10 plus years, if you look at the overarching trajectory in terms of if you take out the volatility and watch that line go right up, it does. But it's the thing about Bitcoin is that it is a frightening, maybe not frightening, that's not the right word. It's an exciting roller coaster is what it is. It's not like the other parts of your portfolio. It's not like grandma and grandpa's real estate investment trust that just kind of goes up 5% a year and pays a 4% dividend. It's not like your your Schwab dividend fund where you got the SCHD or the VDATX or the VIG, where it's just kind of going up, 5% a year and it's paying you the 3.7% dividend. And you look at it and it's kind of a nice little up the mountain we go slowly, steadily. That has its place in a portfolio and it's in mine. So, I'm not all in on Bitcoin. I'm not 100%. I am still at I'm still in the 1 to 5% of assets. I have upped it lately, getting more into the 5% range, but that's still a 5% sort of thing. If it goes to zero, which it's not, it's never going to go to zero at this point, then that's fine. It'll go away and the other parts of your portfolio will be just fine. So anyway, now's the time to buy. But here's the big but caveat. You have to be understanding and comfortable with the volatility. The volatility is a feature, not a bug, okay? Because it is such a raw, such a tight supply and demand. And the other thing to remember about Bitcoin is that it's traded 24 hours a day and people from all around the world, it's a global currency. So sometimes with the stock market, you get sort of weekends off, you get, large institutions that buy big blocks. So it can be less. Now, the stock market can be volatile too. It has different times of volatility, but Bitcoin is known for its volatility. But again, just zoom out. If you zoom out, yes, it's going like this in the short run, up and down. But in the long run, it's really going up is what's happening. And the proof is there in the numbers. People are freaking out now because of a drop to $80,000. I remember when Bitcoin was 17,000. I remember when it was 7,000. So it's all relative. That's what you have to remember. There'll be a time when it drops to 500,000 and everybody freaks out. It was 700,000 and now it's 500,000. So the point is to just slowly and steadily stack your sats over time, dollar cost average in, but it's got to be money that you're not, you don't need right away. It's not your emergency fund. It's an investment, which means it should be time. It should take time. I'm typically a big fan of holding investments for at least a year, probably better to go longer, like 5 years. I think that's what a lot of the people like Warren Buffett would tell you. If you're going to hold an investment, hold it for at least 5 years. So, there was I think he had a quote where it said, if you're not willing to hold on to it for 5 years, don't hold on to it for 5 minutes. And I think that's very critical with Bitcoin. Okay, the other big news that has to be considered for us middle-class investors, wealth builders, is that BlackRock is now saying they have model portfolios. So a lot of these big institutions, they have model portfolios and they do sort of risk analysis over the years. They look out 20, 30 years, 40 years, and they build a model portfolio for people based on their risk tolerance, based on their age, and based on their goals, right? So it has to do with if you're younger, there's going to be more risk. If you're older, there's going to be less risk. That's how it works. If you freak out over volatility, they're going to put you in some CDs, bonds, and very basic mutual funds and some cash. And they're just going to say, well, you don't want any volatility. You just want to get a little small amount every year. And with a portfolio like that, you'll probably keep up with inflation. So you really won't make any money, but you'll get the inflation amount. So your dollars won't make any money. You won't get ahead, but I guess at the same time, you won't have volatility. But anyway, the bottom line is Bitcoin has been the best performing asset for the last 10 years. There's no sign of that stopping, especially with all the things happening with government regulations and the Senate committees and all the different crypto czars and all that stuff that's going on. So anyway, that is a very big deal, though, that Bitcoin is now part of a model portfolio at BlackRock. So those two big bits of news. I'm buying, I'm stacking sats. Again, I'm not gonna go crazy. I mean, I'm going a little crazier than I used to, but I still personally believe in that 1 to 5% of assets. So if you have a net worth of $100,000, for every $100,000, that's no more than $5,000 in Bitcoin. So that's kind of the way I look at it, but it's a personal preference. This is not investment advice. It's all up to each individual to decide what they can live with and how they want to do it. So with that, thank you very much for watching. Please like, subscribe, share, all that great stuff so I can continue to grow the channel, and we'll see you on the next one. All right, bye.